like I've said at the beginning of all of these, okay, we do these because this is what we did back in 2019 when we started this whole thing. We would come in and do these little live streams. I used to do it on my phone from my work truck sitting in a parking lot. But I would do the same thing I'm doing now, only it wasn't as cool and fancy and wasn't as nice to watch. It was the same thing though, right? Then we recorded them, we redid them, and then we made them into videos. So I've kind of been going back through that, redoing it all here again for this next bull market. And these videos aren't released to the public. They're only in the Discord only right now. So if you want them, you got to get them from the Discord list. And that is right here. Copy and paste. This video will be added to that list that I just shared in the chat box there. So Fibonacci retracement, what's the point? Well, one thing we've learned about charts is, if you didn't know, they're quite mathematical. Someone way back in the day figured this out, and they were mathematicians. Gann, Fibonacci, and many other people who studied math and taught math learned that there was a certain sequence of events that would happen in a certain way it would happen that entailed us being able to use that to our advantage. Mr. Fibonacci was a very smart guy. He understood that repetitive numbers such as pi and so forth are repetitions that happen constantly in mathematics, and we shouldn't ignore it. Not only is it mathematics, but it's built into human behavior. Fibonacci sequence is built into your DNA. I need you to understand that before you start thinking I'm just making all this up. The double helix is a Fibonacci spiral. Folks, it's in your DNA. We cannot argue with this. I've got the old reliable XRP chart pulled up here. We're on the weekly time frame. Why did I pick this chart? Well, number one, it's the one that says people say TA doesn't work on. We know they're full of it. Number two, it's extremely accurate as far as technical analysis goes. I'm going to show you now. All right. So first things first, I'm going to drop the camera off. As usual, we're in log mode here, not linear mode. I want to show you log mode versus linear mode. This is log mode. I'm going to click it into linear mode. This is linear mode. I want you to look all the way back here from the beginning till 2017. Linear mode, log mode, linear mode, log mode. One of these is unreadable and one of them is not. The thing is, linear mode is pretty cool for a normal everyday once in a while look. It doesn't work so well when you need to fit all the data on the screen, and crypto is very volatile and it has a lot of movement. And because of that, it doesn't all fit on the screen, does it? Doesn't, no. So the scale on the right needs to go exponential like log mode does for us. Linear mode makes the scale the same all the time. It won't all fit on the screen. We have to start stretching candles, and we never ever want to change the candles. The candles are our scientific data. They are what we make a good decision off of. In any good science experiment, you don't want to mess with the control. A lot of times in science, experiments would be sugar water. We always want to use sugar water because it's the base. Well, the candles are our base. We want to keep it that way. So, Fibonacci retracement. I'm in log mode on the chart, and that's important because over here, second tool down under the cursor is a bunch of different choices, right? You have all these different choices of Fibonacci. I'm going to pull the regular fib retracement. This isn't an accurate way to pull it, but I'm going to show you just so I can get into the settings. Here's how my Fibonacci lines look. You're going to say, well, mine don't look like that. Correct, they don't. Likely, yours look like, well, I don't even have it on here, but there'll be multiple colors and everything else. So I'll show you how to turn that on or off now. First, here are the lines that I typically use for most crypto and for most everything really. 0382, 0.236, 0.5. You can see them right there. All right. Golden pocket, 618, 68, 71. It says 0.8 on all these, by the way, 0.8. All right. Then we get into Sniper's Alley, which is 0.786. I add in 0.886. It's not a normal number. It's just something that we've noticed happens a lot and gives us more of a zone rather than one line. It's more of a zone. And that works best for most people because most people have a job and a life and they don't have the time to sit and watch this stuff constantly. So this kind of helps with that. Then we get to our take profit fibs. This is very important. 1.272, 1.414, 1.618. That's the 3 fibs that we need, which are right here, our take profit fibs. 2.272 is a blow off top fib. That's way up there. Okay, we don't always need that up there. Honestly, I can go ahead and take it off now. It's not needed for what we're going to do yet, but I will show you some stuff with the. I'll leave it in there right now, and then we'll go. We'll reference back to it. I'll make my important ones in red, as you see, 886, 786 in red, and the 50 Fibonacci is in red. I'll explain that more. Here's the background colors and stuff. You can select different colors for your lines. Here's the background. I don't like this. I don't use this. It distracts me, so I turn it off. You can reverse these fibs. Some people like that. I've found mixed reviews on it. I'd rather just redraw them. You can change your labels from left to right. I keep mine on the right, out of the way. Some people like their labels on the left, so it's cleaner for them. Up to you. Most importantly, fibs based on log scale needs to be checked on. On. Okay? On. If you're in log mode on the chart, you need to be in log mode on the fibs. Now, cool thing here, if I flip from log to linear over here on the chart, my fibs automatically will do it for me. Go back to settings here, and you'll see that now it says it's unchecked, which is pretty cool. It does it automatically once you've got that locked in. Save that as a default. You can change your defaults here and save them. Right here under templates, you can see my got black, crypto, dark mode fibs, profit fibs. Have all kind of my own little settings here. You can make your own. I would encourage you to. Okay. Now, into the meat of what we do. It's very important to understand first that Fibonacci retracement is trend based. It's trend based. If it's not following the trend, you didn't draw it correctly. So, retracement. What does the word retracement mean? Retracement is what you do when you lose your keys. You retrace your footsteps, or you go back to where you went before. Do you understand what I just said? You retrace back to where you went before to find your keys. Okay? Fib retracement is very important because it works the same way. All right. First thing we do amongst everything is we find our trends. Now, I could get very detailed with this. I'm not going to do that yet. First thing I'm going to say is we've already been over this with XRP, and we know this trend here, and we know how it went. You can go back and watch the other videos, but this was a downtrend that broke out right here. Can't deny that. But I also did it up here. I'll draw it out for you. Draw it how you want to draw it. I don't care. It's clearly a breakout, and it's happened again up here. I cannot, and I will not deny that. These are downtrends that broke out. So, how are we going to pull our fibs? It's the number one question I get asked. Did I do this right? Did I do this right? Well, Fibonacci retracement works as such. When you go to pull it for a downtrend, you need to have the trend line inside the fibs going down. Here's what I mean. When I pull this, you see the dotted line? It's pointing down. That means that's for a downtrend. I want to see how far this thing is going to break out and run back up, or retrace from where it came. Retrace from where it came. Well, it came from the top. Retracing that way would be going up. Cool. Cool. What if it's big runs up like this and we want to pull a fib? Well, it needs to retrace back down. That would be coming back down. Retracing down. Retracement works both directions, okay? So I'm going to pull a fib here. I'm always going to use my wicks for this, not candle bodies. And the reason is I want all the price action in it. Every bit. I don't want some. I want all of it. Please, before I do this, understand that Fibonacci retracement is not perfect. It's to get you closer to what you already want to know. Nothing in TA is perfect. Nothing in the world is perfect. We're just trying to get closer than everybody else, okay? So, I know we have a downtrend. I'm going to match said downtrend with my Fibonacci retracement tool. I'm going to grab here. I'm going to pull from the top to the absolute bottom. Now, the absolute bottom was down here, or down here, whichever one you want to call it. One of those was the absolute bottom. So I'm going to pull that from the top to the bottom, and I'm going to match that dotted line with that trend line. And there it is. That's pulling fib retracement. That's it. This tells us a couple things. Number one, it gives us our key levels going back up that we're going to look out for. We know that through research, all these different levels are support and resistance here going on the way up. And we could draw them out if we wanted to, but the fibs kind of give us an automatic support and resistance line. For instance, if I were to draw a fib on this, I would say that if I would draw a support resistance on this, I would say, let me grab some lines here, that right about here was some resistance, right? Right about here was some resistance. Somewhere around in here. Yeah, some resistance right there. Some more down here. Right, got to see that. There's some resistance all through there. It's not just going to break through those easily. Rather than drawing all those lines over and over, you can just pull a fib retracement. And from the top down to the bottom, match our dotted trend line with the trend that we already found. Fibonacci retracement comes after that, everybody. So now we have this marked out. As you can see, our lines start to add up. This resistance kind of lines up with the golden pocket, which is between 618 and 71. More importantly, our 50 fib. The 50 fib isn't technically a Fibonacci number. It's halfway. What's cool about this is it's halfway from the top and the bottom, not halfway from the price, just halfway from the top to the bottom. The prices get skewed in here, so you can't worry about that too much. We're not worried about the number of the price. We're at a position on the chart. The 50 Fibonacci line is the continuation fib. What do I mean by that? So I want to give you some examples here. Let's say, no, I went too far with that. Let's say none of this has happened yet. All right, we're watching for this Fibonacci line to get hit. If it gets hit and fails, comes back down, we likely have more continuation down. If it gets hit and goes through, we likely have more continuation up to the next level. Continuation fib. We've seen time and time again that this fails. And when this fails, more down. Or if it's going up, we go up and we bounce on the top and it fails to break through that 50 and fail it, you're going to get more up. It's a continuation fib. It's the first continuation fib, okay? The first one. After that, we're looking for our next area, the golden pocket. The golden pocket is called the golden pocket for a reason. Most stocks, equities, and high cap assets will respect this level a lot. Lower caps with more volatility will blow through this. So I want you to know that it's more so for stocks, bonds, and equities. It will work for crypto. It's just a little less accurate. Ethereum and Bitcoin tend to use it a lot. XRP has gotten to the point where it uses it now. And I'll show you that in a moment. But I wanted you to see it to be seen nonetheless. Also, look back here. This thing kind of got stuck in a golden pocket at some point back there too. Whatever. So after that level, how did we get our name for our Discord? Well, we are the 786 Assassins. Wonder what that could have to do with. Well, that's Sniper's Alley. 786 to 886. Why do we call it Sniper's Alley? Well, in video games, when we first started this, I was giving metaphors to people so they would understand. What are we talking about here? Video games. In Sniper's Alley on a video game, would you run through Sniper's Alley in a video game? Probably not, because someone's going to shoot you. There's a sniper waiting for you to shoot. Much the same way that works, this stuff works. Prices don't usually just shoot through Sniper's Alley. They usually get held up a little bit, just like it did here. Okay. Now this obviously bounced all-time high, but I want you to look at where it stayed at. Rather than failing, it stayed there. It hung up there and played hardball and didn't quit, which is cool. We look for this to cut the prices down and fail. If it fails, we know we're going down more. If it can hang on like it did here, we know we have more up in the future. All right? Really cool. If you haven't noticed, each Fibonacci line is a zone of price action. Here we have a zone. As you see, we failed into it very temporarily, and then we jumped back into this zone, which was much more popular. That space between, 382 and 236, that space, very popular right there, wasn't it? Right? Then we jumped into the next zone, blew right through it, jumped into the next zone, blew right through it, got all the way up here, and then we hung out in Sniper's Alley for a little bit here, which is pretty cool. All right. Sniper's Alley will be important. The one line is usually all-time high. Sometimes it's not, but most of the time it is. Like 99% of the time it is. Interestingly enough, here are our take profit fibs. During this run up, all this euphoria, go, 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 it stops. Die friggin' rectly. Grab my drawing tool at 1.618. If that's not extremely impressive, I don't know what is. Mathematically speaking, it stopped directly at a Fibonacci line. What person did that? Well, what you learn is most of this is not people. Most of this is trading software that runs on a computer or what we call a bot. All right. They use mathematical support resistance and Fibonacci retracement and everything else to make their decisions for people. All right. What's cool about this? Each one of these lines is a separate take profit level. People often ask, well, what do you do to buy? What do you do to sell? This is where Fibonacci lines come super in handy. Down in our lower levels, our 236 levels and our 382 levels, this is where we're aggressively buying, low. Just the opposite of that, up top, when we get to our take profit levels, we are aggressively selling or taking profits. Aggressively selling and taking profits. You have to be able to sell just like you buy, or you never get any actual property. You never actually get any actual property. Property being cash or stable coins. You don't get anything. You only get pretend gains on paper. So in order to sell, you have to know where. And these take profit lines work amazing for that. More often than not, you'll see price stop around these levels. You'll see me draw boxes around each level and have a plan for as such. Now, in the event of a blow off top, everyone always says, well, what if it blows the top off? I shall show you. 2.272 for crypto tends to be our blow off top level. This goes across the board. You can look at many assets and find out that this happened over and over and over again. Take profits all the way up at 2.272. Sounds crazy. I know, but it's the way it works. It's only happened a couple times, but it has happened. We did not get a blow off top last time, and I'll show you what I mean about that. So we had a big downtrend. Yeah. We started an uptrend though, didn't we? Yes, we did. Now look at that bad girl run. Ran like a champ, didn't it? We took profits at 1618. It came back down. If you go down to a daily, you'll see right here, you got a 821 EMA and a 50 moving average cross to tell you to buy again. And we bought again and rode this up here until we got yet another blow off top, which was exceedingly high. Another blow off top. We failed the 50 moving average up here, right at the top, the 821 EMA right at the top. It was time to get out. So now we've got an uptrend that we think will retrace. So we need to pull a Fibonacci retracement. We're going to start where we stopped last time, which was all the way down here at the bottom. If you remember, that's where we stopped. We pulled a fib down here. We started here and we went to the bottom. Okay. Now we're going to start at the bottom and pull to the top. We're reversing now and doing the opposite. Now it's time to sell and wait for an entry. So we'll do that again. We'll follow that trend line. We'll pull to the top, to the top, to the top, top. And there we go. Where would we look to enter just like we looked to sell? Well, that's where those same key Fibonacci levels come into play. Obviously, we know our bear markets are longer than we see here. Once we see this thing dramatically fall and go out of this price zone, we're going to the next price zone. Where did we go? And we sure enough did. Down to the next price zone, down to 236, 382. As you see, it came all the way down and bounced and went back. Now's a good time to explain to you these cycles of time and how they work for Fibonacci retracement. I'm going to put this other one back up here first. You remember I pulled from here and I followed my trend line and I went all the way to the end. We know in crypto that we have roughly 4-year cycles. I want you to look at how long this took from here to here. About 1,400, 1,500 days. That's roughly 4 years. When these fib lines run out right here on the edge, that usually means that that run is over and done, and it's time to fail and time to pull a new fib set. That's just the way it is. This works all the way down to the 1 minute charts. Don't doubt me. I've already done the research on this. So we know this thing had a much longer bear market than that. We know that these bear markets are exceedingly long. As you see here, we went for, oh my God, 1,000 days down and sideways. That sucked, didn't it? Yes, it did. So we can pull our Fibonacci lines over to the right a little bit here until we see a breakout. So I'm going to start back down here again and pull to the top. Now I'm going to pull this on over to the right because we didn't see anything fancy happen. We can keep going to the right here and kind of line up where we see price action kind of dive into a zone and potentially break into another zone. It didn't happen. The really cool thing here is I want you to wait on this and keep these lines pulled out here to the right like this until you see a trend break. Now, I could draw this up here like this and say that this thing actually broke the trend back here. Whatever, close enough. We're watching it on the daily, not the point. More so the point is I want you to keep these fibs pulled out here far enough to where you can see what's happening. All right, once this first zone failed, once this first zone failed up here, we flipped down into the next zone, which was 236 to 382. Once that zone failed, where did we go? We went down to the next lowest zone, down to what I told you was an important line, the 50 fib. Now I want you to look how close that thing came to hitting that 50 fib and bounced. Right to it and then bounced. Impressive. So we continue up. We touched the 50 fib on the top. We continue up. Had this going underneath and touched the bottom. We continue down. Didn't happen. Worked out great. So we formed a bottom and we broke into the next zone. We have a breakout. We can pull a new fib. Let's do so. Let's pull from the top to the bottom down there. We're going to follow our trend. We know we had a breakout. All right. Right about there. Now that we've had that, where did we stop? Well, we went to the 50 fib first, and we went there in a hurry. Look at that. Boink, right to the 50 fib, and immediately fail. Interestingly enough, right here in this very spot was where a bunch of us sold. Well, why did we do that? Well, the daily chart showed us it was time to sell, so we sold. A couple of days after that, the SEC news came in. They were in a lawsuit, and it came flying back down. Good news. We sold up here because we knew this thing touched the bottom of the 50 fib and didn't hold, and it got us worried. So we started selling. It's exactly how it happened. I did a live stream, and I showed everyone that I sold, told everyone over in the Telegram group at the time, wasn't even Discord, that I did so. Either way, you just see this 50 fib hit here. After this 50 fib hit, we came back down. I'll show you in a moment the retrace that happened there. But more so, I wanted you to see the overall bull market for XRP and how badly it underperformed. This thing 100% stopped at Sniper's Alley, got its head chopped off. Once this thing got its head chopped off and this thing ran out of time, I want you to look what happened. All down. All the whole time people were shilling this. Oh, this is going to blow off the top. Nothing. Once that happened, we're able to draw another trend line. Draw it how you want to draw it. That's pretty close. We're able to draw another trend line, and we're able to say, well, I had a bottom down here. Oh, I did not mean to pick this tool. That's stupid. I had the bottom down here. I went all the way up, and I started failing. Oh, man, that sucks. Now that I've started failing, where did it go to? Went right from 236 to 382, stayed in range, blew through it to the 50, blew right through the 50 fib, and went right down to the golden pocket. Remember I said I would show you it was starting to respect the golden pocket more? There you go. From the golden pocket, the fibs run out of time right here. Once they run out of time, hey, that's over. Time for a new fib. Really cool thing is we've got this downtrend over here just running like crazy. So we're able to see that, you know, likely no matter how we draw this, it's all downtrend. So I'll go ahead and pull it that way just to be argument. Well, that's not really correct though. I grab this peak right here and grab that peak there, and it runs over and hits these and comes back. That's more accurate. So now we know we've got a big downtrend here that needs to potentially break. It already broke. Look at that. Ran up, broke, ran up and smacked that 50 fib aggressively. The same way it did over here, if you remember. It's pretty darn cool, I think. After it broke that 50 fib over there, it come down and took a run down. Looky there. Come over here and take a run down. Pretty neat. Pretty cool repetitive price action, I think. All right. After this, we're holding on to 236. We blew through 382. That's no good. If this thing gets through 236 here, well, there's only one zone left, and that's all the way back down here to 30 cents. I don't want to see that happen, but it's a possibility. So we sit and watch. This fib set is not over. It's got until April of 24 to run out. So we already know that our crypto cycles tend to go something like 4 years. I go from the top here, that's April 21, and I pull the 2025. Well, that gives us much more time for this move to pan out. Given that we have better news with XRP, there's a possibility that this big fib is actually correct. You'll see me a lot of times, I leave these big fibs on and I do smaller ones in between them because they work in between them as well. Just wanted you to get the overall understanding about how these fib retracements work. Now, I'm going to drop down here a little bit and I want you to see some more important things happen. All right, so from the bottom to this peak right here where it aggressively hit the 50 fib, do you remember that? I'm going to pull those fibs back. Remove these drawings. I'm going to pull these fibs back up here from the top to the bottom down here. And I'm going to pull it over. Just something so we have the lines to see on the screen. Do it like that. That's a little cleaner. All right. And then I'm going to zoom in here and find these other moves. So I got the bottom down here. And I've seen a top come up here and smack this 50 fib and fail aggressively. This doesn't line up with the trend line. I'm just showing you price action. Look how this thing comes down here and runs to the golden pocket again and bounces. Not only that, but it threw one wick down here to Sniper's Alley. You're seeing these levels get respected over and over and over again. Continuously happens. We can use these levels to find potential bottoms. Hey man, I see it coming up on the golden pocket. What do we do? Well, I'm going to put a buy in right here just in case. If it fails, I got a stop loss set. No worries. I'll buy down here knowing good and well the Sniper's Alley is down there. What if Sniper's Alley fails? Well, I'll set a stop loss below my low. The low is way down here. I'll set a stop loss down here. And if it fails that, well, it's going way lower, so we're okay. And I've used Fibonacci retracement to find a better spot to buy and sell. It's really not that complicated, all right? You can get confused when you add a bunch of them in there. Yes, I would recommend that no one drops down to the 1 hour or to the 5 minute and try, because you're going to get irritated, confused, pissed off, and you're going to want to quit. That's all there is to it. Now, I showed you over here where this thing went down to roughly 786, basically the golden pocket 786 level. Do the same thing here from the bottom to the top. I can follow the trend very smoothly here. Look at that. Pretty darn smooth. This has until May to work itself out, but we've already hit the golden pocket right here. Sniper's Alley is way down at 38 cents. That would be roughly 40 cents. It's a nice round number, roughly 40. So I think there's a possibility XRP comes back to this golden pocket before it does anything super important. You've already seen me share this chart many times over. It's the exact same thing I just had pulled up, only I got some other trend lines pulled here. Depending if we do this trend line or we come back up here and we grab this one, all the same, trends are starting to break. You see it just broke right there. So this looks like to me like it's pointing down, wants to grab some liquidity a little bit lower here. I got that green circle in between 50 cents and 40 cents. Remember just a second ago, I said 40 cents or so. I think that's a solid possibility. This is how I come up with the levels that I come up with. I know it seems complicated, but if you practice this a little bit, you will be amazed at how well it starts to come together for you. I would encourage you again, start on the high time frame, monthly, weekly, then daily, work ways down, work ways down. Let me show you Bitcoin real quick because everyone's going to ask. Let's do this, BTC, USD, pull up the index. Here I have the big bull market, whole thing drawn out here. This goes all the way to the end of 2025, when we know likely we'll have a top come in, right? So what do we see so far? We made a march right up to 236, played around with it a little bit, then eventually bounced. Then we got over the 382, played around with it a little bit, eventually bounced, and then we went right to the 50 fib and stopped. We stopped at the 50 fib. That means more down until we get over it, more continuation down, and down we have come. We've fallen back under the 382 level and are threatening to go back to the 236 level. Interesting, huh? Now, sometimes you'll have a variation between a USD chart and a USDT chart and a CME chart like I've got pulled up now. So CME, a little slower and a little smoother. But I want you to look how accurately this thing at the top of the summer hit that 50 fib. I think the CME chart may be the one to use for high time frame. The reason I say that is it seems to be a little smoother and a little less herky-jerky than most exchange charts. Now, I got this one pulled all the way to the end as well, and I'll go to weekly here so you can see that's October, November 25, December 2025, somewhere around in there. Essentially, we still got a couple good things happening here. We got a trend line going up here that's still hanging on. We have a trend line right here. Well, that's not so good. That one failed, huh? So now we're likely marching to the next one. So once we hit this trend line, we will reevaluate. And I'm hopeful that by then we get a bit of a bounce. There's a reason I thought all this may happen. And now you're seeing it play out little by little because I use the very same things I'm showing y'all. Okay. Super not complicated as we make it out to be. Now let's go down to the daily here and look a little closer. All right, so here's the fib I've been showing for several days. I didn't start at the absolute bottom here. I started up here at this peak because it kind of lines up. If I go to linear mode instead of log mode, everything lines up very well. And I'm cognizant of this, and I think this may have some weight to it. So linear mode chart, linear mode fibs, from this bottom right here, December 22, right before the new year started, kind of lines up pretty darn well. You can see here we came straight through 236 to the 382 fib, and we have been sitting here on this thing for a while. Look at how when the ETF news came out, this thing shot up from 382 to 236 and stopped almost perfectly in this zone and said, psych, it's still stuck in this zone, has not come out of it. I drew this because I have moving averages that show me there's resistance all through here. So even if it tries to come up, it's a temporary high and just rolls us right back over. My next stopping point until we break out of this is down here to the next fib, which just so happens to be the 50 fib, which just so happens to be the continuation fib, which just so happens to be right near that red trend line right there. All this confluence lines up with roughly 24,000-ish. I have other evidence of 24,000-ish. If we go to the weekly and we pull up the 50 moving average on the weekly, that's where 24,000 sits. There's a lot of evidence to point toward roughly 24,000. Could we go a little lower than that? Yes, we could. As you see, golden pocket right down here. I've already got it drawn out with a square around it. I am prepared. If this 24,000 level fails, I will buy one more time down here. That's all the way down to 20,000, folks. It's possible, not probable, but possible. I need to see this thing break out and get moving. Otherwise, she's stuck in the mud and coming back down even more. It's a lot of lows and equal lows over here instead of highs. Shows me it doesn't have very much buy volume, way more sellers than buyers, and there are not enough buyers to kick the ball down the court. All right, so this looks to me like this is going to roll over, come back to our next fib line. That's how I got my targets. This is how I do it over and over and over again. I know this all seems like a lot, but if you practice, take your time, learn, you'll be amazed at how all this stuff opens up to you and you get a better idea of what's going on. Our Discord is built this way on purpose. You can come in and ask questions. It's $10 a month. It's not that much. It was $8 a month a week and a half ago, but only so many people took advantage of it. Now it's 10 a month. WAP.com/786, Team 786. I got a new link for everybody. We no longer use LaunchPass. God almighty, that's bright. Here you go. Paste. They have way better customer support. It's easier to use. You can also use a custodial wallet if you'd like and pay with crypto. You can use PayPal, Google Pay, a lot of different options now that weren't there before. So we talk about this stuff nonstop. This is just what I do for free. We go way deeper in the unlimited chat and all the other chart chats. Everybody has their own personal thread that they can come in and make as well. I want you guys to use this to your advantage. If you do not use this stuff to your advantage, you will be taken advantage of. There is not a single asset that TA does not apply to. Anyone who tells you anything, any different, doesn't know what they're talking about. That's very simple. You're likely talking to a 22-year-old who thinks they know everything about crypto because they bought Shiba or Flocky or Pepe. Okay? Not the case. In the real world, this is how it works. Yes, you may get lucky sometimes, but your luck will run out. Ask everybody what happened at the top last time who didn't take profits. Your luck ran out. I know multiple people who hold Doge right now that they bought at 70 cents and they still hold it. Why? Because it's going to $2. Well, maybe in 20 years, sure. So I need you to think about this stuff. Think about the value you gain from this and think about how well fibs will work for you. I'm going to continue to share them. Please, everyone who's a member, ask questions. That's what we're here for, to give you answers and to make things easier. I got this whole thing recorded. I'll put it up in the Discord list here that I've got. It'll be, let me pull it up right here. Copy link and paste. All the videos that we've done have been put in there. All right. I want you to understand it's not as complicated as we make it out to be. Please ask questions. We will get answers to you. Not me, someone else. So thank y'all for coming. I tried to keep this under 45 minutes. Long form, people have a hard time watching. People have the attention span of about 7 to 12 minutes. That's why I tend not to do these a whole lot. So thank y'all for watching. I appreciate it. If anybody has any questions, please shoot them over in the Discord. I'll get to them as fast as I can. Thank y'all. I'll see you guys over in the Discord. I got to go run and pick some stuff up, get my kid from school. I got 2 more meetings. I got to get on the Discord with a guy from WAP. I got somebody else to talk to and do a private consult with. So busy day ahead. Y'all be good. I'll see y'all next time. Peace.